Hello, everyone. We're just giving this another 30 seconds. People are just dialing in now, so we'll start this very soon on our Open Banking in APAC session. Great. So thank you, everyone, for joining this webinar today on Open Banking in APAC. My name is John Ryan. I'm the Director General of the Emerging Payments Association in Asia. 12 months ago, we undertook a project in open banking. We were responding to the needs of our membership, where in a survey they told us that they felt that open banking, along with cross-border, were some of the biggest issues that they wanted to examine in further detail. This project has involved over 25 global resources. We've had the backing of 8 companies, including PayPal, and some of the members on the panel today from some of those backers are joining us. The project was undertaken with Asia Pacific Financial Forum, which led into the ABAC, which is the APAC Business Advisory Committee conference, which was held in Sydney last week, and we presented the findings of the report and launched the report at that event. And this work now is feeding into the regulatory agenda for interoperability, which APAC is bringing to the APEC 2020 summit, which is being held in Kuala Lumpur. For those of you who don't know, Emerging Payments Association was brought to Asia at SIBOS in 2018 in Sydney. We launched. And we're about creating a unified voice in payments. So we're the only trade association pan-Asia for the payments industry. We do 2 things. We run events and we also conduct research. And that bringing together for an agenda of advocacy and creating that unified voice through collaboration across the region. So we're here today to talk about the research work, the report that was launched last week, and the findings of that report. I'm joined today by an esteemed panel who have been also involved in the project through different activities. And I'm going to hand over now to the panel to introduce themselves and what they do and how they're involved in open banking. So I'd just like to pass it over to Tom, please, if you can tell us a bit about yourself and
Yes.
open banking.
Thank you, John. So my name is Tom Allarts. I work in SWIFT since more than 20 years. And I'm actually a standard specialist. And since a few years, SWIFT is, as you know, the organization that connects almost all the banks in the world, like for international payments, but not only that. But we are also a standards organization. That's an important part of our function, working closely together with ISO. And it is with that point of view, with that hat on, you could say, that we work and hope to enable better data compatibility in the financial world. And that is exactly my specialty. That's where SWIFT has been active in Europe to try to streamline that the data standards for open banking are aligned with what is already being transferred in the interbank space and in the local payment infrastructures, so that whatever APIs are used, the data can transfer without friction. And that is also a message that we are bringing here in APAC and what we also wanted to put in the report.
Thank you, Tom. Anthony, you're next on the list.
Hi, Anthony Morris. I'm based in Hong Kong. If I have a specialism, it's probably the implementation side, what I would call venture building. Spent time at the banks and the schemes, spent time with a big fintech where we took a very old interface and made that available within Messenger, and more recently helped other parties open up API platforms, whether for their own product or for generally. And currently co-chair of the digital banking committee at the FinTech Association of Hong Kong, and we've been intimately involved in providing feedback and guidance to the regulators here on the open banking standards as they develop. So thanks very much for the invitation, John. And
I will add, Anthony, as well, you're an Emerging Payments Association Asian ambassador too, flying the flag for us in the region there. So thank you. Yeah. And Marie, please.
All right. Hi, everyone. I'm Marie Steintella. I am VP of APAC for a company called TrueLayer. We are an originally European but increasingly global API platform that is basically integrating and aggregating the best banking APIs out there. And in Europe, we do that for both data aggregation as well as payment initiation. And I've personally been involved with, I remember the first time I came across PSD2 being talked about was at my previous job with a UK-based peer-to-peer lender in 2015, when we basically looked at it and said this could be game-changing for us to finally get access to some of this data and give better access and better pricing to our credit customers, and launched basically the day PSD2 in Europe went live in January 2018. We launched an income verification journey off the back of an integration with TrueLayer, actually. So I've gone from the industry side to the vendor side, and look forward to providing some perspective from the industry and from the aggregator view on what we are seeing in Asia to do with open banking.
Excellent, thank you, Marie. So the report itself was a 36-page document, and we had a good chance to go through it last week and do some workshops, which some of you and some of your organizations were involved in. So it was quite a full week that we had. I guess I'd like to just put it to the panel. What were the parts of the report that stood out to you that you felt were most relevant that we should be thinking about? And I will just start at Anthony here on this one first.
Okay, thanks. I think actually I really like right at the beginning the statement that actually it's about implementation. So I think a lot of us in the industry recognize the opportunities, and we can think about how this is helpful. But I love the call out that ultimately implementation is what really matters. On a specific, I like the inclusion of the API exchange AFIN in the Singapore section, but actually it covers all of Asia. And this is very much around making sure, or providing a way that people can experiment and find the things that the end customers, whether they are consumers, small businesses, or third parties serving those, can really experiment and get validity on, because those are the things that ultimately actually will be successful and will drive everything else. So yeah, those are the two bits that I particularly picked up.
And Marie, what was what stood out for you in the report?
I found, so the data was interesting from the survey, and I think it was an interesting pulse to see how people felt, especially about the involvement of regulators in the market. I think, the world is split on this question, and it was, it was very, very interesting to see that actually the majority of people did support regulation, or some strong role of regulators in the development of the ecosystem. It's something that we have found to be very helpful in Europe. If the collaboration between industry and regulators and banks works well. And then the other part in the recommendation section, I think, highlighting the importance as well of figuring out a framework for liability, and not just the technical standards, which are important, of course, but also making sure that banks, when they actually are mandated, let's say, to provide data, that there's also some guidance and steer around how complaints are handled, how things get treated when something goes wrong. And those were the most interesting parts for me.
And I hope we can drill down a little bit on that but during this session with you, Marie, just to understand your experiences there. And then finally, Tom, what was your favorite?
Yeah. Well, two things. First, more general, simply at the very introduction parts, there were those tables about from the survey also the benefits and the risks. I mean, we should know all of them, but it's worth re-stressing. There are really huge benefits to a community, and it's really a call to action for all banks also, and that can be a bit of a pain point. You could say smaller banks which may not necessarily be as technically savvy, but really a call for action. This open banking world can be really a competitive advantage if you play that well. So that's the first thing. And then quite specific, there is somewhere a big paragraph which is quite obvious also when you see all the different regulations in different countries, the different approaches. It is actually, there is a challenge there for the larger organizations which are working in different jurisdictions, how to then adopt APIs that work that work per country, which can be because of that quite different. And for me as a standardizer, as my main focus, I think it's a complexity, but there is also an opportunity to at least alleviate that and make more interoperability possible, so that large organizations and also fintechs do not have to completely re-implement everything.
Thank you. It's good points. So I will state at this stage that we will allow at least 15 minutes at the end for questions. So please do get your questions ready. Then please fire them in now if you can. So in terms of the research, it did talk about inclusion, and certainly it was a big topic for us last week at APAC, really focusing in on that and how it's going to impact. And 70% of the respondents to this survey said that inclusion open banking was going to help inclusion. But I'd just like to hear from you, what are you, and I'll just put this open to whoever wants to answer it, but in terms of inclusion, what are you seeing as being good in open banking, and what are the risks? What are the things we should be thinking about there as well?
Mm-hmm. I'll jump into this one to kick it off. So just to set the scene a little bit, if we think about open banking in Europe, I think in Europe and very developed banking markets, the banner under which it is often being pushed is competition and opening up of innovation. If you look at the situation in APAC, and especially places like Southeast Asia, obviously you're faced with a very different reality, where you have across Southeast Asia, as an example, 50% of the population unbanked, 24% underbanked, and 26% banked, according to a recent study by Oliver Wyman. And I think on that front, it's really about looking at, when you're talking about open banking and making this data available to bring those under and unbanked people into the more formal economy, what are the financial relationships that you have? And let's make sure that when we're talking about open banking, we don't very narrowly just consider banking as in people who already have a bank account. So that's when it requires a bit more creativity, thinking about, well, what other parties are these underbanked and unbanked individuals liaising with, where they are generating data that could be useful to bring them into the formal economy, and making those part of the scope. Now, obviously, right now, today, we're talking about open banking, and it's a challenging enough topic on its own without thinking about additional sectors like utility or telco contracts that these people might have. But I think that's where actually in Australia, which is a much more developed market, they are starting to think about some of those other sectors to bring into the fold of open data and open finance more general. In terms of how to improve inclusion, I think from the more data you have on an individual, the better you can price them, the more access you can give them to credit products and other things that can improve their life. There are obviously downsides, but I'll pause here so I don't monologue.
Thank you. Yeah, that's some excellent terminology introduced there. Hopefully we get to hear a bit more about that too, about the open data and open finance. But did anyone else have any thoughts around this?
Well, I don't have much to add to Marie's very complete view. I was really thinking indeed that for the unbanked, let's say an unbanked farmer, but these days most people have a smartphone, that even for them there will be real opportunities to get loans, compare loans, for example. I see really a benefit there that it will allow for uplifting people's, you could say, social environment. I also see it as a tremendous opportunity for the banks to use this vehicle for them. I mean, as a commercial advantage for them. There is a whole market that they now don't serve. So I see it really beneficial for everybody. It's very exciting development. The risks are more, I think, still the usual risk around the security and the identity management, which are the usual risks that are indeed tough nuts to crack.
And Anthony, you?
Yeah, I think the huge opportunity is on the big engagement platforms. So, going away from going to the developing markets rather than the developed in a traditional sense, although I would actually argue the likes of China, Indonesia, India now with what commonly gets referred to as super apps, but they are these consolidated applications that address all needs. Ali being probably the favorite, since it managed through one API integration to a money market fund and a direct integration to every bank in China, which it had already done, to create the world's biggest money market fund, just through one of the many things it offered from an inclusion point of view on, they called it leftover treasure, just a little bit more on your savings for the hundreds of millions of people that are on that platform. To me, from an inclusion point of view, enabling these platforms to provide financial services and information, whether, as Marie and Tom both alluded, that this is a way of the banks expanding their base in a cost-effective way to people they wouldn't previously serve, or serving them with a more rounded set of products. That to me is the huge opportunity. And clearly you can do it without a official, formal open API framework, but the more it's available and the more all the issues are dealt with, the more we'll see these pushes into these, particularly in these markets. I think other markets are coming at it slightly differently, but these markets where, mainly because of the real lack of any memory on the smartphones as they rolled out, we ended up seeing everything consolidate around a trusted, secure experience that then flowed into all of the aspects of both financial and personal everyday living. So I think that to me is a really huge opportunity.
Great. Good. And I'll just quickly ask Marie, was there a downside you wanted to touch on there? Because I know there were some things we talked about last week.
Yeah, I think in addition to the security and risk elements, obviously extremely important, I think there is something around what happens in a situation where you're creating a product or an experience where people feel forced to share. I think there's something around that. So how can you make sure that when people share their data, is it genuinely done with agency and done freely and clearly? That one I think is manageable, and there can, generally I think people are smart and capable of assessing for themselves whether it's worth sharing data or not. I think there's something around adverse selection, not in the sense that if someone doesn't share data, what does it say about them? Maybe they have something to hide, but maybe more in the sense of what if you are in a situation where someone wants to share, but they don't know how to because they're not technically capable of doing it yet on their device, or because the journeys that are implemented are so onerous and cumbersome that it's really hard for someone with perhaps a lower level of literacy to go through. I think there's something there around to think about adverse selection or false signals and false negatives. But that's already assuming that the journeys are implemented and the data is available.
Okay, great. So we've touched on it a little bit now, but security, privacy, and governance. That seems to, it's an obvious one to come up as we start connecting and trying to connect, and we're obviously coming from a space as well where open banking today or connecting to banks today is often done through screen scraping, and it's a big concern. What are the key issues that open banking is bringing up in this area? Again, I'll just leave this one open for you to jump in here.
I'm happy to start off on this one because I think we already have precedent, but it's not often referred to. So the precedent is the way, particularly payment schemes, have developed cooperation and competition at the same time. So they cooperate on the infrastructure, rules around risk, liability, whether you're eligible to access, performance actually, can you respond within a certain time, can you cope with the volumes. Those are all things to maintain the integrity of a payment scheme. So that's the cooperation so that it's interoperable, which was a key theme of the report, but also so it's cost efficient, effective, robust, reliable, which is all about the trust of a particular experience. And then you let them compete like mad. They just go and compete. So between you and me, every payment card, every Visa card is essentially identical for obvious reasons because they interoperate. But you wouldn't believe that if you look at all the marketing and features and things because actually that's where they compete. So we actually have a very mature model for how the biggest banks in the world collaborate on creating a set of standards around technology, liability in terms of who's clearly responsible, a method for dealing with those in terms of chargeback mechanisms, and the operating regulations and the criteria to let you connect, and making sure you're an entity who, even if you're allowed to connect, have you got the liability insurance behind you in case anything goes wrong? How do you react to that? So, and the easiest example of that is PCI DSS, where you're actually letting third parties into core payment data. And data is probably the bit that falls between the cracks in most regulations in most markets. So people find it much harder to deal with because the payment is well established. So I think looking to how this has happened before, those provide really good guides. The reality is they actually came out of independent organizations pushing because there was a need, which is effectively, and then people specializing in making it easy for developers or for parties like TrueLayer does. So that you can have an industry push, but again, you can also have hey, I think it's going to be easier than having, say, 5 payment terminals on a counter as you used to, probably still do in Indonesia. Why don't we just have one and just agree to interoperate through it? So, yeah, I think that co-opetition, there is a lot of challenge, but we have models that can make this work if people agree to collaborate on the core infrastructure and all the issues around it, because it's good for everybody that it's robust, safe, reliable, and it's clear what we'll do, and then let people compete like mad.
Anyone else?
So tackling just to recap, the original question, what I remember from it was security, privacy, governance around data. What should we be watching out for? Obviously, Anthony, good points there. I think tackling it from a slightly different perspective, I think one of the big questions that I've heard in many of the conversations I've had with clients, our clients, fintechs, but also consumers in my previous life of actually implementing this for consumers in Europe, was a point around, well, is anyone actually going to share their data when you have all these scare stories around sharing of social data and what Facebook does with your data, and essentially a skepticism around whether people would actually share their data. And I think as a participant in the industry, and as an industry, the financial services space here has an opportunity of setting a bar of how data should actually be shared with the customer's consent, and how we can make it clear to people what is happening, who they're sharing with, making sure there are clear consent frameworks and at least some guidance on what liability models can look like, and also helping people to understand what is actually being shared. Because bringing it back to the philosophy behind open banking, I think is kind of a clear recognition that the data that a customer generates, whether they're an individual or a small business, the data that you generate when you bank is yours to share with third parties of your choosing, and it's yours to make use of. And I think that's always worth keeping in mind when we're talking about this stuff, because security, privacy, and governance are paramount, but should not be used as I think when it's a genuine concern about it, that's fair. If it is used as a way to kick the can down the road and not recognize that, you know what, it's time for us to work together and make it useful for consumers, then I get a bit nervous around the conversation.
Great, and I'm going to just ask Tom to come in, but I do want to come back to you on that point you just made about the consent management and what's happening in Australia. But Tom, please tell us your thoughts.
Yes, I also wanted to chime in on that. It's actually one of my colleagues has been working for APA Asia around the consent mechanism for MPP in Australia, actually. And in general, yes, it is a big complexity. And also from a standardization point of view, ideally, you would have something that can work cross-border, which is even more difficult because of the local laws about letting data go out of the country. So we are not yet really there for a universal region-wide solution. I think regulation will be an element there to come up with widely acceptable principles on giving consent on data and how the data is or is not kept. I think we will evolve towards that. From your earlier point on the security in general, also again thinking a bit more internationally than locally, there may be worth in, well, I know we for example are looking at that kind of issue of having certificate authorities that trust each other, so that because you cannot have one certificate authority for all the citizens in different countries, but a way that they can trust each other so that you can have open banking services that can work across countries. But there are different elements, and we are on those elements, on those issues, I think we are still relatively early in the journey before we have a good solution.
So Marie, thanks Tom, and thanks for bringing up the piece about Australia as well. But I'm also interested in the consent rules that they brought into Australia in the last 2 weeks. Marie, what's your thoughts around how that's affecting your what are the impacts for you in terms of your business model in Australia? What do you see as the opportunities, and now that they've got some details about that framework?
So I think generally the consent, the philosophy and principles behind consent frameworks in most of the markets we're looking into that have centralized standards and a centralized entity that's in charge of governing the ecosystem and of letting people in or not. The approach is fairly similar, whether a consent flow has kind of 3 steps or 1 or 2 or 7. Ultimately, I think there is space for the industry, so to not make it too TrueLayer specific, but I think there is space for the industry to innovate. So I think the bringing out rules is really helpful because it gives us something to play with. It gives our competitors something to play with, and it gives fintech something to play with. But in terms of the impact, like that's our job. I think that's the industry's job, to take these guidelines and these standards and to turn them into something useful, but to also feedback once the system is out there in the open, where it's working and where it's not working. So as an example of a lot of the work we've done over the last 12 months in Europe, integrating with banking APIs and building these connectors out and showing the user journey, we've been able to make significant progress on the user experience and on helping customers understand who they're giving consent to and how. And Tom, to your point around international, a way of internationally recognizing who should have access, etc. I think March 14th, I think, is the deadline for the eIDAS certificates to be implemented in Europe. This is probably fairly technical, so I'm not going to go into too much detail for this webinar. But I think that will be a real testing point for the industry of can this work, to have a programmatic way to assess whether someone should be given access or not? Because if it can, and I'm confident it can, that's really exciting, because it shows that there's a technical method that can represent a liability model and a registration and an accreditation model that exists in the legal world, and make it programmatic and interoperable. And I think that's going to be really exciting. And then back to how does it impact us as a platform that's aiming to make financial innovation easier for fintechs and taking away a lot of this heavy lifting. It's our job to then make that really easy for our clients to just sign up, get everything authorized, and it should just work. That's kind of where I see our role in that. So it doesn't really matter what rules come out. We'll play ball. We'll make sure we're really on top of it, and that's what we see as one of our benefits for working with us.
Excellent. Anyone else on that?
Yeah, I mean, in Hong Kong, one of the challenges, which comes from the UK experience that Marie refers to, we ran straight into with both the HKMA and then HCAP, was the HKMA made it very clear, genuine customers acting in good faith, actually won't be liable. So actually they, in their framework, push this. Obviously, the only people that can push it to are actually people they regulate, which is one of the challenges. So one of the really hard things in the absence of getting people together to collaborate and agree on an approach is you end up with the individual negotiation power between a provider of information, the banks at the moment, and then the third parties. And I guess this is somewhere where somebody who's aggregating like TrueLayer can come in, because you can begin to set actually a pattern that allows the banks, even if they're not getting in a room together, to begin to agree on what the standard patterns are. Because without it, it was good. The regulator made it very clear. They obviously didn't provide the solutions they did in the UK. So this is in the big picture, it isn't complicated. It's a bit like what happened with PCI DSS. If your data gets stolen from somewhere, who's liable for the consequential cost? Well, if you followed all the rules of the schemes and you've been independently audited, then actually you're not, because you've done everything we asked you to. If you didn't, then whoa, are you going to pay a lot of money for replacing cars and all the fraud that flows through? So, but I think we're very early. I don't know, Europe a bit further, but certainly out here, we're very early on that journey.
Good. So thanks for touching on the regulatory piece there, because we did find in the survey we did in the report that over 70% agreed that the regulators were actually moving in the right direction, doing enough. Didn't sense that we were already there, but definitely heading in the right direction. And as Marie mentioned earlier, that the influence and the input of the regulator was certainly appropriate to help open banking get on the agenda. I guess I'd just like to throw it open. Is that the impression of the panel, that the regulators are doing enough? Is this the right approach, comparing it to Europe and other markets? I'd just like to hear from you generally on this topic.
So I would say that perhaps not in all markets in APAC. I think some regulators are still trying to wait and see what happens with the industry, which there is some precedent for in other markets that can work. But as an example, I think that the UK, especially in Europe, has really kind of become the front runner in showing how it can be done, regardless of how mature or not the implementation perhaps was at the beginning when the APIs first came out. But just in I moved to the region a bit over a year ago now, and have just been very positively surprised by how much the UK is seen as a front runner. And as a result, I think even markets that have had previously existing implementations of similar approaches, but haven't really had that regulatory backing, just aren't seen as thought leaders. So I think in terms of agreeing, or in terms of the question of are regulators doing enough, I think there are definitely markets in in APAC where there's really promising stuff happening. I think Australia is doing a great job with how they're engaging with the industry. Obviously, it's always difficult. I don't envy any regulators trying to bring together industry and consumer stakeholders and activist groups and governmental officials. It's not an easy job. So I commend the work that they're doing at the ACCC in Australia. I think the one point I wanted to make around the regulatory piece is, I think it's one thing to mandate that data should be shared and to mandate the recognition that the data belongs to the user and should be theirs to freely share. It's another thing to mandate exactly how it should be shared. And I think the latter is more of a question for industry than a question for a regulator, just in terms of speed of being able to test things, taking learnings from other technical situations. So that's something I would stress there to any regulators who might listen to this or other topics, other similar sessions. I think it's really important to differentiate those two.
Yeah. In my impression and my contacts with regulators, it is quite obvious that they have been looking quite closely at what happened in Europe. So in a way, yes, they are following the example of Europe, especially the UK, to in essence get the best features out of it. And we from that standardization interoperability point of view, have been asked to give a lot of information to a number of regulators in that respect. Something also that Marie brought up there about exactly how the data is exchanged is indeed, that is something that is usually left to the industry, and there is maybe a risk that you end up with banks doing things on their own instead of having the philosophy. The underlying idea is that you would have one API that can be used across one country, at least, no matter the bank. But typically what we see is that regulators, at least initially, leave that to the market, and maybe when they found out that that may not work as smoothly as expected, that they will step in and make it tougher. Because in the end, the idea of having a few different APIs to do the same function is, of course, much preferable than every bank having their own APIs.
Yeah, I think on that point, I think this is obviously, we're a platform that specializes in aggregating these APIs. So, I think it's really important to mandate what data should be shared, and to do that in a way that's loophole free, and to do it in a way that's actually useful and comprehensive. So it actually gives enough data. And I think that's something, again, where the open finance conversation that is starting to happen now that we've gone through phase 1 of open banking in Europe is really encouraging. I would say that, one thing on if the choice is having a situation where everyone's clear on what data should be provided, and banks provide different looking APIs that fundamentally provide the same functionality and data, but they do it in year 1, let's say, or in year 2, versus a situation where everyone's, again, similarly clear on what data needs to be provided, but there is a multi-year project to completely standardize everything before anything gets launched. Then I think as an industry participant, as a fintech, as an innovator, I would prefer a phased approach where you start with something where banks provide APIs and they might not all be exactly the same, but they all provide the same data to at least enough of a degree. Then hopefully in future followed by a perfectly ironed out standard. That's obviously the nirvana, but I wouldn't want that to get in the way of something useful being released sooner, because the longer it takes, the more consumers have to wait for better experiences. So that would be a slightly controversial point there.
No, I think you're right, and I think it's kind of what we've seen happening in Europe, where indeed, in the spirit of innovation and being quick, there were a number of APIs were being used, and now quite recently there has been let's say after a few years of PSD2, there has been some alignment has happened, and is also something I'm happy to report that some of my standardization colleagues in Europe helped there, that to have in essence an API that can work for to ask what is on my account all over Europe, and it looks like it's being accepted by all those working groups. So, but indeed, that was in a second phase that did not hold up the first phase. Now, what I then bring rather to Asia, what I hope to bring at least is, well, let's look at what was done there in Europe and look at that approach and adapt it for what we need in Asia, which of course some local flavor, but at least to be to keep that spirit of interoperability. That would be my recommendation, and also what I've given to a number of regulators and working groups. Yeah.
Excellent. We've sort of stepped into the last question, or not the next, sorry, the next question, which was around standardization of APIs. So we've definitely been talking about that. Now, I'd just like to slightly tweak that question, which was, I just wanted to talk about, we've touched on standardization, but what, I guess what is the broader role of standardizing going to look like in the project of open banking across Asia? And I guess, you know, APIs, yes, but I guess in the broader sense as well, because we are looking at wallets and we're looking at QR codes and so forth in the mix here. So what is that going to look like for us in the Asia Pacific region and to get success here?
I'm happy to pick up a little bit of this and also pick up a little bit on the regulators. You know, I think, you know, Marie and Tom talked about some of the technical and data semantic standardization, which is one thing. That just makes people's life easier, whether that's an aggregator like TrueLayer or the end consumer, developer consumer of the APIs. Probably the bits that I worry about and hear about as being a problem, you actually need performance standards. Because there's no point in having an API if it doesn't work. So it might work when somebody comes and tests it from a compliance point of view. Cool, you've ticked the box. And this is my probably worry around the regulators. We're probably seeing more compliance than commercial drivers. And to make it work, we have to shift to this being commercially attractive. And that probably comes from two parts. The big banks realizing that they're in the best place from a trust point of view to do this, which is coming back to the way card issuers work. If you're the big card issuer, it's in your interest to get interoperability because you're the big card issuer. I think we've still got people in that innovator's dilemma going, actually, I'm quite happy with what I've got because I have such a big share of the market, so I don't really want to push this. And not pushing it can involve it just not being kept up to date, not stable, breaking, you know. So all of those things come into what we need to standardize. And I think related to that is there's probably a point where if the market isn't moving, the regulators need to become, it's not about getting everybody on, I don't think. It's getting, say, 80% of the market on. So not dissimilar to what the CMA did from a different perspective. They went for the big 9 and they didn't get any choice. So those two bits, I think standards are broader than the stuff that we do worry about from a technical point of view, particularly about uptime, reliability, and then we get to operational standards. And I think for a market to be successful, you're going to need to see that shift across. You want at least one of the players to break ranks. You know, a bit like Apple Pay in, not that there would, you know, in Australia, you at least need one to break ranks and then the rest to start following, and maybe a little bit of pressure there.
Yeah. I would also like to add something is beautiful, Anthony. Indeed, there's so many levels of standardization and interoperability, as you infer. The security level, the onboarding processes, the KYC, there's so many standards. from my own little world, which is only part of the puzzle, the data semantics, if you keep in mind that there is a business standard used by many RTGSs now, the modern ones in Australia and Hong Kong clearing will happen that way, China is moving that way, and also that the correspondent banking world is moving to this specific ISO standard that we refer to in the book. Whatever API that you makes that is a simple recommendation. You need data. I mean, you put data in it. Well, make certain that it uses the same definitions and limitations as what the banks already use. So that already there you don't get headaches for adoption. It's a relatively simple recommendation to use this open standard. And that indeed is only one part of the puzzle on interoperability, but it's an important one. And for example, we know HSBC published an open banking API for direct debit in Hong Kong, and they made certain that that all the data in there is aligned with a faster payment system in Hong Kong, which uses this ISO standard. And that is a recommendation for everybody, next to the complexity of having the exact protocols and so on, which are also not trivial to align.
That's great, Tom. And I think just to add, one of the things that came out at some of the workshops last week as well was the importance and what financial services and banks particularly have already been doing for years in this space, is working on these standards, and how other industries, the utility providers and so forth, can actually benefit from that proven capability that is in place. In addition to the digital experience and the digital user experience that the banks also are facilitating, and the fintechs as well now, that can be reused in the broader economy as open data, Maria's expression earlier, starts to roll out. I just want to quickly jump onto a question that we've got here. So just ask it broadly on the panel. In terms of the risk challenges for financial inclusion, what is going to be the role of the regulator to protect those consumer rights? So what do we expect to see happening, or what should happen in that space in terms of helping the consumer?
Right, big question. Let me have a stab. I think any government makes a decision on how far they want to curtail certain practices to protect consumers' rights, and a lot of it, from my very naive understanding of it, depends on their assessment of how savvy or not savvy and how self-determined a consumer's choices are. I think these are questions around how especially vulnerable consumers should be protected in an ever increasingly sophisticated world are already questions the regulator has to wrangle with. I think, regardless of whether someone is included in the official system or the informal system, those are challenges that the regulator has to account for. So I think making it principles-based and not specific to a particular channel or data set is the right way to go there. But hands up, I'm not a regulator and have never been in government. So very interesting question, though.
Mm.
I think one of the big challenges here that we ran into, and I know the UK ended up having to address directly, the problem with the current regulations of the current couple of challenges. One of them is they don't regulate the data particularly. So certainly under the laws here, banks have a duty of confidentiality under common law around customers' data, but that's it. Banks have nearly always been primarily concerned about, obviously, soundness, stability, and usually about money moving. So all the really tight rules come around money moving and whether I'm sound, which is another aspect of money. It just depends on the ratio between my deposits and what I'm lending. And then clearly things that impact that money moving then become a problem with liabilities attached and regulatory sanctions attached. There's some very broad stuff around, obviously, the reputation and stability in the whole system. But certainly here, they haven't specifically addressed the consequences of a data going out, and therefore the liabilities associated with that. Now, we've had many, many years of ID theft, particularly in the States, I think more prevalent, but generally, and that allowed people to effectively on the false application side to extract money from the system. But a pure liability around data, I think, is probably one of the areas that regulators really need to tidy up between the co-regulators, because sometimes the data privacy body will pick it up, sometimes the consumer body. But in my experience, the banking regulations, it's not something they've over worried about and addressed specifically. So I think that certainly came up when we were looking at it. I believe with the CMA in the UK, that became one of the hardest bits when you're certifying people into the system, is what are the very clear liability frameworks and levels of proof and consequences when a threat does appear, when somebody who has connected, or vice versa. So that's probably, for me, the hardest area. And sometimes the regulator needs to unwind things they put in before. So certainly here it was necessary, even on the early stages of the open banking integration, which are around application, both pricing and application features and then application processing. They had to reverse some earlier prohibitions around third-party agents being able to do this type of processing. So there's some conscious unraveling of things that they need to do as well.
So I'm just going to have another question here. It's quite a long one. I'm going to try and paraphrase it a little bit. Basically, it's around just if you'd like some comment from the panel on the internet as the conduit exchange between the data of the fintechs and the banks. So there is a mention about screen scraping possibly, but when it comes to PII and transaction level detail, will the internet be reliable, secure, fast to meet the needs? And how to track the movement of the data and protect against attacks? So, is it going to be reliable or not? Just like to throw that out there again, see if anyone has a particular slant on internet or how we're going to do this.
From what I think that the technology it's really a technology and a process matter. The process, I mean, really on how the technology is implemented maybe be even more important than the technology itself, because otherwise you have if you don't implement secure protocols properly, you have a false impression of security. So that is the challenge, like it always was. Technology is evolving quickly with many highly secure solutions. So and the performance of internet itself for that leg of the communication, in my opinion, it's rarely an issue. I mean, come on, we watch Netflix. It's much more data than APIs, So I don't think that the performance is there, and the technology, like I said, I think that will be resolved by, but you can imagine that some banks which are not technically very savvy and we do it on their own instead of having a highly professional partner there, may botch up the implementation, and then having a weakness. That is a definite risk where I think that there will be a need for learning in the industry, or at least using very good software partners.
Yeah, I think just quickly on that one, I mean, I think screen scraping data, depending on the scraper and which bank and what they present on their own website or app, currently also covers PII and transaction level detail. So I think if that is a question, then that's a question we have today.
And I think that, just very briefly, actually, best practice patterns are well recognized. You encrypt the data at rest and in flight, you token, massive advances through tokenization. And anything that's sensitive, you only unwrap it, when you know you're safe. So any this we've been able to do this for ages. It's just whether, as an industry, we do it. So the patterns are well recognized. As Tom said, it's more to do with people implementing them.
Yeah, so good partners and make a good plan around this, right?
Well, yeah.
Okay, excellent. Look, we've run out of time, so I think I really did want to ask another question, but well, I think we'll have to defer this. We've obviously got the next session that that Emerging Payment Association running is actually going to be in Sydney. It's an executive roundtable and then an at-home event. So we've got about 80 people already signed up to that. It's on the 27th. So we're definitely going to get into more of the meat on the bone in that session as well. So really looking forward to it. The one question I did want to ask here today was how we're going to, if you wanted to kick off an open banking project, how you can do it. So we'll have to leave that. But look, I think it's been a great session here. Covered off on some great topics and being able to go into a little bit of detail. But also looking into the report, I appreciate that we've taken it apart a bit more and got some more details there, which is very useful. I do want to thank the panel today because I appreciate that you're all different internationalities, but you're all actually based in Hong Kong, and I understand the challenges of that at this time. So appreciate your time and focus that you've given us here today. We do. The Emerging Payment Association gives $50 to UNICEF for each panelist, so that's a normal practice that we've adopted. So look, as I say, at this stage, I will just also mention that this event will be recorded and we'll host it on the website as well for future users to have a look at. So again, thank you everyone. And I thank you to your attendees as well for your questions and your guidance as well. So thank you, everyone.
Thanks, everyone.
Have a good day.
Stay healthy.
And